The new government led by Mr. Narendra Modi in the last few months have taken positive steps to bring in certainty on the tax front, which is an important consideration for companies operating in India and for investors. This being the first full-fledged budget of the new government, the expectations are running really high. From a transfer pricing perspective, I would like to look at it from three aspects. One, on the announcements that were made in the previous budget pertaining to areas which would help reduce transfer pricing litigation. So, for example, the introduction of the range vis-a-vis the arithmetical mean was surely a positive aspect, but the rules are yet to be out on that. Since this is applicable for year ended March 15, companies want to really know what the rules would be and which would help them to close their books of account. Similarly, the taxpayers are awaiting rules on use of multiple year data, also on rollback of APAs, which I'm sure would help, the rules would help to close many of the APAs which are close in terms of the advanced stage of their negotiation. Also the safe harbor norms that were introduced some time back was a bold step. However, it needs tweaking for really taxpayers to adopt the program and look at it as a feasible means of reducing transfer pricing litigation. The second important aspect that I would look at is guidance in transfer pricing regulations. Some of the countries like USA has detailed guidance in their transfer pricing regulations which enable the taxpayer to understand some of the revenue interpretation on vexed issues. Let me take the example of the recent landmark decision of the Union Cabinet to accept the High Court ruling on issue of shares. This is indeed a big and bold step from the government perspective. But if the same thing is translated into the transfer pricing regulation itself, it will go a long way in helping the taxpayers understand and interpret the transfer pricing regulations. Similarly, for other transactions where income does not get generated or it is not income, what would be the interpretation and guidance on that? That would again be an area that the taxpayers would be interested in. Valuation of tangible, intangible property for the purpose of transfer pricing, guidance on that would be really helpful. The third aspect that I would really look at and which is important is the transfer pricing, administration, infrastructure and approach. At the end of it, the good intention and to get positive amendments in the transfer pricing regulation to reduce litigation has to be implemented at the field officer level. Their approach to understand the facts of the case, to spend time on with the taxpayer in understanding and getting into the detail of the case would be really helpful. For of course, one would really need to augment the staff as well to enable spending that kind of quality time on transfer pricing audits. The areas that we have discussed, if many of this is implemented, I'm sure it will go a long way in bringing in certainty and increasing the confidence of the taxpayers. At the end of it, it will be a win-win for both revenue as well as for taxpayers, and more importantly, it will improve the investment climate in the country. Thank you.